Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is the last day of July, July 31st. We are going to take a look at Kenvue. This is actually the company that is going to be spun off of or broken away from Johnson & Johnson. So let's jump in and take a look. So if you want to know more about this company, check them out, www.kenvue.com. That's www.kenvue.com. That is their homepage where I pulled this information from. As I mentioned, this is actually the company that's going to be broken off from Johnson & Johnson. This is out of the consumer staples sector. And here are their brands, from gently cleaning tiny fingers during a baby's first bath to protecting the vitality of your skin to soothing aches and pains. Our products deliver safe, effective, everyday care at every stage of life. So they're going to be spinning off the products here: Tylenol, Nicorette. I mean, you probably are well aware of a lot of these brands. Motrin, Zyrtec. I live on Zyrtec in the spring and in the fall. My sinuses are notorious. So I am a big proponent of Zyrtec. I mean, everyone knows Tylenol here. DRCI Labo, Rinocort for allergies as well. That's a spray. Benadryl, same thing. I have kids, so we have some Benadryl for, bug bites and that sort of thing. Neutrogena, Aveeno, OGX, Listerine. Probably a lot of you use Listerine. Johnson's, from the famous Johnson & Johnson's brand, and Band-Aids. Again, I have kids, so we have several boxes of Band-Aids, right? And whenever brands are so iconic like Tylenol and Band-Aid, basically whenever you say, like, go get a Band-Aid, it may not even be a Band-Aid brand, but that is, the brand of a brand of Band-Aids, right? So you might be going to get another type of Band-Aid, but the brand is so iconic that it doesn't matter who makes it, you're going to call it a Band-Aid, right? Tylenol, same thing. You might be using off brands of Tylenol, but calling it a Tylenol. Nicorette for any of people who have ever tried to quit smoking, and then, like I said, Zyrtec, Motrins. So you are probably well aware of these brands here, but these are all going to be spun off into the consumer staples new company called Kenvue from Johnson & Johnson. So let's jump in and see why we're looking at them today. Well, they were down 2.97% on the day. We are talking about Kenvue, ticker KVUE. This is the new company being spun off from Johnson & Johnson out of the consumer staples sector. Closed the day out at $23.67. 52-week range, and really, I don't even know if they've been out a year yet. They were down as low as $22.49, as high as $27.80. Right, currently sitting at $23.67. They are closer to their 52-week low than their 52-week high. Average volume 6.4 billion. Today was 14.2, and a big sell-off in the morning, then kind of leveled out throughout the rest of the day. Looks like they might have a little shot up in the afternoon, right at the end of close. Market cap of 45.335 billion. They do not have a beta yet, and I'm going to bet that's because of the time that they've been on the market. They have not been on the market very long. I think they've only IPO'd 2 or 3 months ago. So again, not very long. And then later this year, either August or September, well, we're going to be in August tomorrow, but later this year, they're going to be letting you allocate some of your shares from Johnson & Johnson to pick up. You can swap them in for Kenvue shares if you like, or you can just buy Kenvue shares outright right now. PE ratio, very high, 35.34. Earnings per share, EPS, is only 67 cents per share. That's a little low. Earnings date, they do not have another one listed, and you're going to see that kind of trend. A lot of the information just is not available because they have not got a history to really lean on, and the numbers that you are going to see, a lot of them are just numbers that were carried over from Johnson & Johnson. So for this one, you'd have to be playing a little bit of a guessing game of, what they're going to be forecasted to do into the future, what they've done in the past, because they were part of a larger company and are being broken off here. Forward dividend is 80 cents, so they are going to pay a dividend. It's 3.28% yield, so very nice yield on this one, right? I believe that's pretty close to what Johnson & Johnson, maybe even a little higher than what Johnson & Johnson is paying out. I believe they're in the high 2s, so this one's going to have a little higher yield than Johnson & Johnson is. Ex-dividend date, August 25th, so it is coming up, right? If you were to buy them now, and so long as you bought them on August 24th or before, you would be in line for the next dividend payout. 1 year target estimate, $27.75, at least according to Yahoo Finance. not affiliated with Yahoo Finance, just one of the sources I like to go to for information, and I always recommend more than one source, so we'll see another one here in a little bit. You can use any source you like. These are just two that I like. Now, I'm going to run this through just like, even though there's not a lot of information available, I'm going to run it through just like I would any other company. So I'd look at statistics for dividend yield theory and see if it's potentially undervalued. I'd go over and I'd look at their 5-year average. Again, this one does not have a 5-year average, so there's nothing to compare it to. So you wouldn't be able to really use dividend yield theory on this one. You might have to do like a discounted cash flow analysis on this one, although a lot of the data you're going to be pulling from that is data from Johnson & Johnson that you're going to have to figure out on your own what this sector would have been, what the breakdowns would have been for revenue, the earnings and that sort of thing over the years. So this one is a hard one to kind of gauge, but let's keep running through it. As we said, ex-dividend date, August 25th. They're going to pay out on September 7th, looks like. They do not show the payout ratio. We will see what they estimate it to be here in the future, but Yahoo Finance just put a 0 down. Again, not enough information to really go off here. Financials, I'm assuming they pulled these numbers from Johnson & Johnson, whatever this sector was out of Johnson & Johnson and ran them, because this company has not been around since 2019, but let's look at it anyway. And you'd find that under financials. You usually find balance sheet, income statement, revenue, debt ratios, all that information under financials for any company. You want to be looking at all that, make sure their assets is over liabilities, that they have growing revenue over time, they're paying down debt, their debt is not increasing, that sort of thing. So 2019, 2.7 billion, 2020, 3.1. So growth there from 2019 to 2020. Big drop from 2020 to 21, only 390,000. So that was a huge drop off there. And 2022, big jump up back to 2.15 billion. Overall, from 2019 to 2022, 2.7 to 2.1. There is a slight decrease in free cash flow. It does look like they're paying down some debt, which is nice to see. For this particular sector. But again, these are all numbers that they had to have pulled out of the Johnson & Johnson numbers overall just to make, put something in here. Now let's jump over to stockanalysis.com. Again, I always recommend more than one source. This is another one that I like, and they have 9 stock analysts that have taken a look at this. They have a low estimate of $26. It currently sits under that lowest estimate, so that would be a 10.08% increase in the stock price. Average estimate of $28.11. This would be pretty close to what we saw with the Yahoo Finance on the previous page, which would be a 19.01% increase in the stock price. And if it happened to hit their high of $30 estimate per share, that would be a 27.01% increase. And all the while, you could collect that 3+% dividend yield. Now, I like to go into under statistics and look at return on equity and return on invested capital. But again, they don't show either because they just don't have enough data here. This company has not been around very long. Again, I think it was spun off or the new listing was listed about 3 months ago. It hasn't even been technically spun off yet. They'll do that later on this year. So not a lot of data on this one. Makes it hard to judge. If you wanted to follow these 9 stock analysts here, maybe that's the best way to look at it. Their recommendations, it currently does sit under all of their recommendations, even their lowest. So maybe there is some value here, but you would really want to get into the numbers on this one and go back into the Johnson & Johnson numbers and see what portion of their revenue came from these brands, what portion of their earnings, that sort of thing, how much debt is going to be spun off with this. Are they going to be liable for any of these lawsuits that are out there, or is Kenvue going to be clean in that? That's the information you want to look at for this company here. Now, same deal. They do have a payout ratio here, 20.27%. They are going to pay 20 cents per share. They will pay out on September 7th. No dividend growth yet, just hasn't been around. But I would use Johnson & Johnson as a gauge here. Johnson & Johnson grows their dividend typically between 6 to 7%, so I would use that pretty much. I'm assuming that this will be similar in nature as far as dividend growth over time. But again, that is an assumption because this company has not been around. So hard one to gauge on this one, guys. I don't know. Again, if you really are interested in this company, you need to do a lot of research and figure out how to break off this sector of the business, see what the revenue has been over the last several years, see what the debt is going to be shifted over to this company. A lot of more digging on this one. I might hold for a little bit and maybe put it on the watch list and see how they do over the next few quarters to give yourself a little bit more of time to judge this one, or you're just going to have to do a lot of deep diving into the numbers in Johnson & Johnson and figure out how to break those out to see how this company fares. This is the vested interest stock screener. This is how I look at a company. This is also how I set up the videos here. So understand the business. You want growing free cash flow over the last 5 years and expected in the future. A growing dividend payout ratio of 75% or less. Check the valuation based on dividend yield theory. Buy below current cost basis or within 15% of a 52-week low. So if I own it, I want it below my cost basis. And if it's not under my cost basis, I want it within 15% of the most recent 52-week low. Look at the return on invested capital and return on equity, like 10% or better. And for financial companies, I throw in price to book, and I want a 1 or lower, or close to 1 or lower. Must meet 4 of 7 if it's not a financial company, and must meet 5 of 8 if it is. Well, that is it for this one. Let me know what you think about Kenvue. Let me know what you think of the spinoff with Johnson & Johnson here. Again, this is a tricky one. Maybe some people are buying it already. Let me know. I do like the brands. They are, brands that are well known. And Johnson & Johnson historically has been a good company with nice growth, nice dividend growth. So maybe a good time, potentially undervalued here based on the analysts to jump in this and see how it does. But for me, I might just throw it on the watch list and take a look at it over the next few quarters and see how it does. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we're watching, stocks that we're buying, stocks that we're avoiding, just tips and tricks that we've learned along the way. Answer any questions that people might have down in the comment section where we can share our ideas. That's what it's all about. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Say thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.